Hello, welcome to Charting and Technical Analysis. My name is Peter Mueller, and in this video series I will show you some basic charting and technical analysis tricks which can help you to make better investment and trading decisions. As a tool, we will be using the Yahoo Finance chart, and when you go to your web browser and you simply type in finance.yahoo.com/chart/GLD, you will get the chart we will use during the day. Now let's briefly go through what we are going to cover today. We will show the basic chart layouts in the Yahoo Finance website. We will show you some chart types, mainly the line chart and candlestick. For candlestick, we will have a separate video session altogether. We will talk today about time intervals, whether we look at a stock for 1 day, for a month, for 15 minutes, for 5 years. Time intervals are a very important aspect of charting analysis. We will also look at technical indicators like moving averages, exponential moving averages, Bollinger Band, MACD, and RSI, and others. We also will briefly talk about indicators and comparisons when we compare our own investment with a competitor or a stock market index. Now, let's go to the website. When you type into your browser finance.yahoo.com/chart/GLD, you will see the chart on the right hand side, what you see here. I will soon go into the full video mode that you can see it in detail. But first I want to show you here on the very right hand side there is a thing which says called setting. Now you see the box. The only important thing you have to know that the box price detail is being switched on, which shows you the details here on the left hand side, which is giving you some details of the investment. And then on the upper line here are the various instruments for charting and analytical tools we will go through. So let's go to it in full screen. Here you see the GLD chart for 1 year. You see it starts in January, lower left corner, and it goes until today. So here you still see we have pressed the settings chart. Now we have it disappeared. Now let's go through the chart in detail because you will always see this. On the upper left corner, you see it says Spider Gold Shares GLD. This is the name of the ETF. It will show you first the price at close, 140.63. And in the after hours, there is still some trading going on. On the right hand side of the chart, you see here the dollar signs, which will show you the dollar, the value of the investment. So at closing, the stock had 140.53, but after some after trading, you will see 140.53 was the definite end date. On the bottom here, you see these bar charts, which is called the volume chart, which tells you how many shares have been trading during that day. You see here on the bottom it says 4.06 million. That means on this particular day, 4 million shares have been traded, but you see there were days when there were 20 million shares traded and so forth. So here we see basically the line chart giving you for each individual day the market price at closing. This is important to realize because a stock during the trading day between 10 o'clock in the morning and 4 o'clock in the afternoon, it has many different prices, but on the chart you will see here the price at the end of the day, and you see a lot of zigzags. you see it's pretty volatile, but in general terms, you see over the first 5 months, GLD did relatively little. Then it had a very nice growth period and pickup, and then it tapered off a little bit, and it's looking here to stabilize at around the 140 level, but for more details, we talk about it later. Let's go to this line here, which is very important to see. The first thing here we see, it says line. When we click on the arrow, we see it says line, which is the current representation. We can put area, it will just fill the space underneath. And then it has 4 different versions of candle. It says candle, hollow candle, bar, and colored bar. All of them are candlesticks. My personal favorite is this representation, the traditional candlestick. Looks very busy, but we have a separate video session on this. Candlestick representation can give you a lot of signals what is really going on with the stock market during the day, because the candle shows you what's happening during the day. So here these other bars, they simply show you different representations, but they show you the same thing. Again, my favorite are these solid candle bars. Now let's go back. The most used one for initial analysis always is the line chart. Now, very important, when you want to look at a chart, you want to know whether you want to look at it from a 3-month period, 1-year period, and so forth. So the time period is important. So here on our chart, we have just 2019. If we want to see anything different, we have 3 ways of determining which time period we are seeing. The first method is up here, where I have the cursor which says data range. When I press on data range, it gives me on the left hand a window and on the right hand a window. The left tells me the starting point down here on the chart. For example, let me go, for example, to April 2019, 1. And then I say October 19th to today, and I say apply. And here we go. It goes from 1st of April until today. And we can use this one actually for years to go. So we can go back, for example, July 2018 until today, and we see July until 2019 until October. This is the first method. The second one is we choose one of the presets here from Yahoo, D, 1D. It says simply today. This is the stock price of GLD during the day. And you see down here every half hour in these vertical bars, white and gray, this helps you quicker to find every half hour how the price actually changed within half an hour each of the time. For example, 5-day, this is one trading week from Monday to Friday. You can have 1 month, and you can have 6 months. You can have year to date from January until today. You see here 2018 until today. And it has multiple years, 2 years, 5 years, and it has one max. It goes as long as it can go back through history. So here it is 2004. So we have more than 10 years of the gold price, and you see gold had a pretty wild run until 2011, and then it went down, and now recently it had another way up here. Now for the time being, let's have a look at the 1-year chart as we go on from here. Now the third method, so we have the data range, or we choose these fixed points. The third method is we see down here very quickly, the second one, sorry, is this. By just clicking on the plus sign, it zooms in. The time interval now is, for example, July till December, and when we press the minus sign, it zooms out and the time interval gets longer. This was the second method. And the third one, if you are using a mouse and not your trackpad, between your right and your left mouse click is the little wheel, and when you roll on that wheel, you see you can actually move it very quickly forward and backward. And here you have seen when it's not perfectly adjusted to the end, you go into the middle of the chart, you make a left click, you grab the handle and you move it to the right hand side. Or you just press on 1 year and it will give you the basic chart back. Now let's go to the indicators. The first and only one we are covering today. We press here on indicators and you see it says commonly used, moving average and Bollinger Band, RSI, MACD. These are my favorites. And then it says all indicators. And let's quickly scroll through. You see very many oscillators, Bollinger Bands, Chaikin money flow, various kind of techniques. And based on the availability of all these indicators, you know there is not one magic one which will answer all your calls. Now let's go to the moving average and start with a very basic one. Let's pick here a 10-day moving average, which means it takes the average of the last 10 trading days, which is 2 weeks, and let's choose here let's say a green color to look at it, and for the time being we say we keep it at market close and at a simple moving average. And here you see in green a 10-day moving average. You see the curve, it has much less oscillation than the original time chart. Now let's add another one and look what it does when we say, for example, we make it 20 days, 20 trading days, which means it is basically 1 month. And let's put this in red and let's have a look. And you see the 20 chart, the 20 curve is much smoother, but it starts to react much slower to market changes. For example, when the market took quickly up here, you see the 10-day followed relatively quickly, while the 20 took a longer time. But on the other hand, when the market went down here on this side, the green line, the 10-day, adjusted relatively quickly, and the 20-day had a little lag and followed later. So it represents a more stable picture, but it reacts much slower to the situation at hand. And at this time, let's keep it at this. We have shown here 2 moving averages. In our next session, we will talk more specifically about moving averages, exponential moving averages, and the various time intervals on how they interplay. The most important about moving averages is, number one, we have to understand how it is calculated. So a 5-day moving average is taking actually the values of the last 5 trading days, adding it together, dividing it by 5, voila, and we have a 5-day moving average. And the curve shows you literally moving this 5-day interval step by step. And here we go, we have our 5-day moving average. And we can have 5-day, 10-day, as many days as we want. The important thing to remember is, number one, the more days we include in the moving average, the smoother the curve gets, but the slower it reacts to actual changes in the market. Secondly, we have to know the moving average we have been using here is the linear moving average, which gives the same relative weight to each of the days included in the moving average. There is another technique called exponential moving average, which assigns a higher relative weight to the more recent days in the average. This will allow then the exponential moving average to adapt quicker to the current reality and to go closer to the actual line chart as it is. And there are more techniques we will discuss on the moving averages, crossover techniques, and so forth. For today, let's keep the following lessons in mind. Number one, always look at multiple time horizons when you look at charts. Look at it 1 day, 6 months, 1 year, depending on what you are looking at. If you want to make it trading decisions for 5 days, maybe you don't need a 5-year chart. But from a 1-year chart, looking down to 6 months, to 3 months, to 2 months, to 1 week, this is a very helpful way to show you to zoom into the market, into the movement of your security to see how it might go. Then secondly, there is also no magic formula. Test multiple moving averages, knowing the more you include, the longer, the slower the curve reacts to changes in trend. Secondly, use always linear and exponential moving averages and compare them. The exponential one will always adapt closer to the reality than the linear one. Also remember that every stock or every ETF has I call it its own algorithm. That means you cannot have one technique, one moving average and one indicator and apply it to the Dow Jones average, to gold, silver, oil and whatever. Each single investment vehicle has its own algorithm and you analyze it to find out with the selection and the variables you put into the parameters to find as close as possible in an historical simulation to it and use it for predictive purposes. So there is no one-size-fits-all approach. Thank you very much and see you on the next session.